about one more stock that's under pressure today, and it's a recent listing. We're talking about the International Gemmological Institute. They are, of course, into certification of diamonds, both natural diamonds and lab-grown diamonds. And we know that for IGI, their lab-grown business has really been growing because that's where the volumes are and that's how the market has been. Well, we have the management with us. So we have both Mr. Tehmasp Printer and Eashwar Iyer joining in. Gentlemen, thank you so much for being with us in the studios. Glad that you could make it. Obviously, the market's reeling under pressure and, there's maybe some sense of disappointment with earnings, and we'll get to that. But let's talk about the fact that the nature of your business is evolving because of the growth in lab-grown diamonds, right? Now, it's almost 60% of your business. Natural diamonds have come down to just about, I think, 20%. So it's important to understand what these changing dynamics mean for overall margins. This quarter, you've grown your margins to almost 57%. Yeah. But in general, do you earn lesser margin when you certify lab-grown diamonds versus naturals?
Okay, what happens is technically both are diamonds. One diamond is much more affordable than the natural one.
Sure.
Okay, so it's volume driven. So what is happening today is a lot more consumers are being able to afford diamonds, and diamond is an aspirational value for everyone. So we have gone into the fray by saying that we certify both diamonds and we give you the origin, which is man-made or earth-mined.
Mr. Printer, we're aware of that. And I remember we had this conversation even at the time of the IPO, because this is going to be a big volume business for you. But we're just trying to understand, in terms of margin differential, where do these two categories stand?
So obviously, natural diamonds are unique and rare and in limited numbers. So our margins on natural diamonds is far more than the lab-grown diamonds, where, I mean, the price is also low and we have to keep our certification cost depending on the economies of scale that we get from volumes. So overall, the realization from lab-grown diamonds is less than natural.
And Eashwar, come in on this, because I think that's one concern which could be playing out in the market. Overall, of course, sentiment is quite weak in mid-caps. But that's the concern. You're at 57% margin now. Now, how much is that margin differential? And will volumes make up that entire differential? Can you sustain at 57% or grow the margin from here as lab-grown share keeps on increasing?
Okay. So let me just give you an overall perspective in terms of how the business has delivered over the last 12 months. We've surpassed the 1,000 crore milestone as a company, which is a tremendous performance given where we started 3-4 years back. Revenue is growing 23% at the consolidated level. And just to touch upon that, we made a declaration in the RHP as well that IGI India would be purchasing the Belgium and Netherlands entity. We have completed the acquisition, and this is the first time, therefore, we are seeing the results at a consolidated level. So 17-18% on revenues. Overall, total income is up 20%. And again, my PAT growth is around 29%.
We have the numbers.
We have the numbers.
So the margins, etc., is at 57-56% is commendable, given the nature of the industry that we are in. And just to touch upon what Tehmasp mentioned, we have dynamics at play between natural diamonds as well as lab-grown diamonds. Lab-grown diamonds obviously compensate for the margin differential through the volume basis. So we are therefore 27-28% of volume growth also this year versus previous year. So that's the key driver for volume growth is driven by the lab-grown diamonds.
Is there a downside risk to your margin?
So there is, at the moment, we don't anticipate any downside risk because the volume growth should more than compensate for the slight differential between the two. Obviously, when we have a scale up of volume at the levels at which we are, we also have to ramp up our infrastructure in terms of basically adding more people, getting more space out there so that we are able to accommodate people sitting for grading, etc. But that is very insignificant given the fact that our gross profit margin is around 80-85%. I don't think that should be a concern at all.
Mr. Printer, just a quick word on the need for certification itself. So this is from, again, it's a allied kind of transcript. This is Goldium International, which the company you know very well in the lab-grown space. On their conference call, right, somebody sort of pointed this out. And I'm going to just quickly read this out. He says, certification is driven by our customer requirements. As an example, in the US, when lab-grown diamond jewelry just started getting introduced, all customers, all large retailers required certification to separate the inventory, which was lab-grown, from the inventory, which was natural diamond. Today, with bulk of stalls in US crossing more than 50% of the inventory being lab-grown diamond jewelry, they find a lesser and lesser need for full certification or complete certification. That is it's a fundamental issue. I don't know if that is true or how do you see it?
But see, what is essential, and for lab growns, it is very essential to be authenticated by an independent certification body. Otherwise, it's just a piece of glass. So IGI provides that certification, that saying that this is a man-made diamond, and the other one is...
No, but what this seems to suggest is, because it was a new product, it was entering, and then you need to have that certification. But now if, say, 50-60% is lab-grown, then you don't need to certify everything. I mean, it is... the category itself is being replaced by lab-grown in some sense. So the need for certification perhaps goes down. That is what Goldium is suggesting. So just wanted your thoughts.
So what happens is, initially we used to certify smaller diamonds in lab-growns. Today, the average weight of the lab-grown diamond is increased to 1.5, 2 carats plus. Earlier we used to certify 30 points. So what is happening is more and more larger diamonds of lab-growns, because they are also very affordable. So they are getting certified, and irrespective of whatever the price is, there is a awareness which is being created. Like if you see, 1.5% of the Earth's population used to buy diamonds, and that was all natural. Today, because of the affordability of diamonds, this percentage over the next few years
will increase
to 5, 8, 10%.
So are you saying at the lower end, maybe certification requirements may drop off gradually? But at the top end, the larger diamonds, certification will be required.
At the lower end, what will happen is that they will be included in jewelry. So there will be a big spurt of lab-grown jewelry, which we also certify. So just as we started initially with the loose stones, today we are also concentrating on the lab-grown jewelry, and we are taking that into cognizance.
Okay, all right. Hi, gentlemen. Good morning and good to see you all in. Let's get a couple of basic numbers out of the way. As you said, 1,000 crores for the year. And I think the growth you said in terms of volumes, the reports, I think, was around
27%.
What was the number?
9.3 million
reports, right?
Yeah.
What about in the upcoming year? What kind of a revenue growth are you guiding for after hitting that 1,000 crore mark, which obviously you all are quite pleased about? What's the revenue growth you're looking at? The margin picture, give and take everything with regard to the mix. And if you could quantify the volumes, please go ahead.
Okay, so again, there is a small portion of an industry analysis that we did during the IPO process. I think the way we are seeing this market is currently the gem and jewelry business is around $100 billion globally, expected to go to $140 billion over the next 5 years. The certification business in that component is around $600 million. Okay, and that is expected to go to around 1,100, 1,200. $600 million going up to $1.1, $1.2 billion over the next 5 years. The key aspect here is, the entire growth, over 20% of that growth, people are expecting it to come in from lab-grown diamonds. And just to the point that Tehmasp just mentioned, while we have been certifying stones, and which has been lab-grown stones, I'm talking about, that's seen acceptance in the US market in the last couple of years. But what we are now seeing, a trend that is emerging, is a lot of jewelry certification in lab-grown diamonds, which is happening in India. So we are looking at consumers actually starting to come into the fold as far as India is concerned. While the final stone gets into the jewelry, which is finally what people like you and me buy. That acceptance started in the US, but we are seeing a massive impetus coming in that aspect for the India business now. So that is going to be one of the key growth stories for us. And again, coming to the margin standpoint, I think extremely strong business performances, etc. We will obviously continue to deliver on managing the revenues as well as the cost in a way that the margins are protected.
Okay, no, but give us a couple of numbers then. And
I think again, as I mentioned, overall, around
revenue growth should be what, 20%, 25%?
We should look at some volume growth in excess of 20%.
20% volume
between
growth.
12 to 15% growth on revenues.
9.3 should be around what, around 11.5?
It should be, you can add another 20% to that.
Yeah, and you gave a revenue growth expectation, 15%.
We should look at between 15 and 20% CAGR over the next 5 years.
Okay, I just want to understand, because you gentlemen made a very interesting point in terms of larger lab-grown diamonds still having the need for proper certification. When you talk about your total lab-grown business, in terms of a volume breakup, how much would be large stones and how much would be the smaller stones or jewelry? What would be the rough mix right now? And I'll tell you why I'm asking this then.
Bulk of the volume is in 1.5, 2 carat plus.
Okay.
Bulk of it. Okay. And there are 10 carats, 5 carats, 20 carat stones also. Okay, but the bulk of it remains in this range.
In the large.
Yeah.
To come back to the point that Prashant also raised about the need for certification, whether it's jewelry or whether it's the smaller stones, could there be competition from jewelers themselves or manufacturers? It's like, because when you have an item which is priced at say 25,000, which could be a small, piece of jewelry with lab-grown diamonds, you're competing with, luxury scarves and luxury shoes and luxury bags. And a lot of those items do not need certification. It comes with the manufacturer's own certification that, yes, this is genuine leather, etc., etc. So just, going forward in the future, could that be a risk to the lower value part of the lab-grown business, which could be jewelry or the smaller stones?
See, where jewelry is concerned, I mean, it'll be a cluster jewelry. So there are a lot of small stones and it depends on the designs. Okay, but however, there has to be some branding. Even the luxury brands, they carry a brand value.
But it's their own intrinsic.
Yeah.
It's not a third-party certification, largely.
But, they have their own brand.
Sure.
Today, the jeweler as such need to authenticate that it is a lab-grown. So from that perspective, certification, independent certification is absolutely essential.
Okay.
Got that, Mr. Printer, Eashwar, thank you very much, both of you, for joining us. Make diamonds great again.
Thank you.
I absolutely.
They're always great, lab-grown or natural. As the woman on this panel, I can tell you that.
all
Diamonds will always sparkle.
I'm still part of the 98%.
We're very happy the moment that stone comes.
Of the 98%. Yeah. So when he said you and me, I was saying it's not me. not yet me.
Gentlemen, thank you very much.
Thank you so much.
Thank you very much.
Thank you.
And we'll chat again.
Thanks.